Hello friends, welcome to another video of Ichimoku Cloud Tutorial, and we have already understood the structure of Ichimoku, the all the components of Ichimoku, and after doing so, today it is time to learn the Ichimoku Cloud trading strategies. Now you understand the structure, you understand how to identify a range bound market using Ichimoku Cloud, and how to understand uh, how to find out a trending market using Ichimoku Cloud. And now it is time to make money and by using the Ichimoku Cloud trading strategies. So without wasting any time, I will start with the first strategy, which is called cloud breakout strategy. So here is the chart of Amar Raja energy, and as by now I am sure that you understand the structure of Ichimoku Cloud. If you don't, please watch my previous videos for Ichimoku Cloud tutorial series. So in order to understand, this is the cloud, this green mountain kind of thing, this is called cloud, and this is the upper boundary of the cloud, and this is the lower boundary of the cloud. I am explaining this for those who have directly landed on this video. So for their understanding, I am explaining it again. So in cloud breakout strategy, the entry point is when the price breaks the upper boundary of the cloud and closes above it, closes significantly above it with a bullish candle. This is exactly what has happened in this chart on 8th April, which is like 1.5 weeks ago. So here the candle, a very strong candle, closed above the cloud. On the previous day, the price was below the cloud, and on the in the very same day, it crossed the cloud and closed above the cloud. So this is a very strong bullish signal, and according to our strategy, it is time to enter the trade. So there are two ways to enter. One is that you can enter immediately at the open price, which will be somewhere here, 879.55. Or if you are a more conservative trader, what you can do is you can wait for the retracement. So you will wait for the price to come back near the top of the cloud or near the level where it closed on that day, which is 866. So you wait till here, and you see after 3 days price came back here. On the fourth day, price again touched the upper boundary of the cloud, and from there it price started going up, and it made a doji kind of candle, but a bullish candle, because the candle is green, a green doji. So here it clearly, someone who understands Ichimoku, he will clearly identify that after the cloud breakout, we got the support from the upper boundary of the cloud, which goes to show that this is a confirmation signal basically for cloud breakout strategy, and one should enter the price on the same day closing. Before the closing one can enter, or on the next day opening. Better to enter on the same day, because this is the confirmation. Here we went alert. Some optimistic and trader who is not afraid of risk, he can enter here itself and wait for price to go up. But more conservative trader can enter here on this day before the closing price, somewhere here, and place the stop loss just a little bit below the upper boundary of the cloud. Somewhere here he can place the stop loss, or to be more conservative, he can place the stop loss below the middle of this candle. So if I place the stop loss to show the risk reward, somewhere here I will place the stop loss, and these were my targets. This was the first target, and this was the second target, and price exactly touched my target, and then it has fallen a bit. So if we see the risk reward, it was 1 is to 5.58, which is a really good risk reward ratio. The risk was only 3.62% stop loss, and the target was 20%, 20.2%. So these are the kind of entry signals that cloud breakout strategy can give, and you can get trades of such a great risk reward ratio. I mean, 5.58 is a huge, I should say. And I will show you a couple of more examples. These are all recent examples. And in my previous video, some of the people were complaining that you show very old examples, and you are showing examples from your blog. But in this video, I decided to show fresh recent examples, and this is another example. So here it is Motilal Oswal, and on 1st April the price closed above the cloud. So price was coming from below the cloud, and on 1st April it was a bullish candle, and price closed above the cloud. So similarly, like on the next day itself, price came below and made a bullish kind of candle, because it almost touched the upper boundary of the cloud, and the price closed above the previous day close. So again, a conservative trader will make the entry here, and or he can, like after he see that the price almost touched the cloud, and somewhere here also he can make the entry and place the stop loss, because here you can see the cloud is, let me hide this for a second. So if you see, cloud is moving up, so this is the advantage. Like you are supposed to place the stop loss just below the lower boundary of the cloud. So since cloud is moving up, you can place it somewhere here also, like you enter somewhere here, and it will be a very small stop loss, but you can, for a conservative trader, you can place somewhere here. So going by that, if I place somewhere here, being a conservative trader, oh, sorry, here I took the entry somewhere here, and placing the stop loss around here. Okay. So it is again like 3.77% risk, being a conservative trader, and this was my target. This was my final target, and it was 5.47 risk reward ratio. The target was 20.63%, and stop loss was only 3.77%. So even after hitting the target, the price has went up more, but it is okay. Like it is not a good thing to always be greedy. As long as you are achieving your target, you should be happy to book your profit and be in cash. And if the price goes above, it is okay. You don't have to worry about that, and you should try to find out other opportunities. So this was the cloud breakout strategy. On the similar fashion, we will talk about the cloud breakdown strategy. So this was the bullish scenario, and in the next strategy, we will talk about the bearish scenario using the cloud itself. So in this strategy, it is nothing that all we expect is that the price should close below the lower boundary of the cloud. When the price candle closes below the lower boundary of the cloud, it is known as cloud breakdown. So those who want to read it, I have a very detailed tutorial in the blog form as well. So I will share the link to this my blog page, and it will directly land you, because it is a very long tutorial. So these are the all the contents of the tutorial, all the structured way. So I will provide the link which will directly land you here. Cloud breakout strategy for Ichimoku Cloud. So this was breakout we already talked about, and now we will talk about the breakdown strategy. So again, I will take some, although I have some examples here. This was for the bullish scenario. You can go through the all the content and all the chart I have mentioned, like how the breakout has happened. For example, I will briefly discuss this, like moving average bullish crossover strategy with Ichimoku Cloud on the Ultratech Cement chart on daily time frame. So here, if I open it briefly, okay. So here, similarly, I have mentioned that here cloud breakout happened with the green candle closing over it. Here the breakout happened, and in a very similar fashion, which I talked about in the previous charts, the retracement happened and the price went up. Like this was a huge move. Like price went up from here to here. It is like I mean, the risk reward ratio here will be like 1 is to 2025. But yeah, it is a old chart. So uh, I mean, the point is that the Ichimoku cloud, although it looks quite complex, but once you understand, you can get mind-blowing targets using the strategies which are you know uh, provided by Ichimoku cloud. So here I have mentioned as well that it was a significant rise of 28.5%. So this is how we understand the cloud breakout strategy. Now I will quickly show you the breakdown scenarios. So for breakdown, I have examples. Here we are looking at the Andhra paper. So if you see this candle is a long bearish candle, and it closed significantly below the cloud. This was the lower boundary of the cloud, and cloud was red. So the color of the cloud also matters. A green cloud usually indicates that the price is trending in a uptrend, and the red cloud gives the indication that the price is in the downtrend. So here if you see that the price was trading sideways, but in the last few candles it had turned very bearish. So this was the candle which gave us the cloud breakdown signal, and it was a strong red candle, as you can see here in the chart. So after that, the next day itself, there was another bearish candle which was huge. Like if someone had entered here, like at the closing, and within single day he had the potential to make 9%. So basically the price was closing below, like after few days the price went up, but it was rejected and it made another huge red candle. And if we see from the day's high till close, it was like a 15% move. And if we say the entire from the day's high to day's low, it was 18.67%. So after once the cloud breakout happens, the price turns bearish, and these are the kind of moves it can give. So if like here, if a person would have entered here and after the next day he would have either exited, or he would have if he would have placed the stop loss somewhere here, it would have got hit because this candle eaten away all the liquidity. But after this candle, it was pretty much clear that it, because it closed below all the previous lows, and it was pretty much clear that the price is in the downtrend. So after that follow up also, you can see the price has been moving down. So I will take another example, because in this example, I mean, I should share all kind of examples. Like in this case, probably the trader would have closed the partial targets here, but in the next day for the remaining position, probably his stop loss will get hit because he will be placing the stop loss above the cloud. So this candle will probably hit his stop loss, but this is not always the case. I mean, to give you the reality check, I decided to give such an example. But overall the price became very bearish, and after that it made lower low, and this was a pullback move, and after that there were lower lows, and again this was a pullback move, and then there were lower lows. This low was below this low, and this low is also below this low. So let me take another example in which it is a successful trade. Just give me a moment. Okay, so let's talk about another stock, which is Vedant Fashion. So here the price closed below the lower boundary of the cloud, which is our entry signal for the bearish Ichimoku cloud breakdown strategy. So we will talk in the similar fashion like we talked about in the cloud breakout strategy. So price closes below the cloud and some retracement happens to the upper side, and it was the lower boundary of the cloud acted as a resistance on the 22nd of December 2023, and it rejected. So here, and it closed here. So this is can be considered as a confirmation candle in this case, and after that one can you know enter on the next day opening, which is somewhere here, and he can place for targets. You have to go back and see which were the previous lows. So this was one of the previous lows, and if you go back after that, the next low was somewhere here, and if we go back further, then there is another low, 953, 953, 1058, and this one. So this target was the first target was hit pretty much very soon, and the next target, which was 1058. So let me show you the risk reward. Here the person will enter somewhere here, and he will place the stop loss. He can place like somewhere above the lower boundary of the cloud, which is in this case like less than 1%. So if you are a conservative trader, you can make it a bit high, like 2.5%. And the first target, which was here, I have already drawn the line. First target was 2.71 risk reward ratio, for the next target, which was 1058. So here, look at the risk reward, man. The risk reward was 1:7. I took this target based on the previous low, and within a matter of few days, like it was, the entry was on 27 December, and on 23rd January, like in less than 1 month, it hits the target of 18%. And this is not, if this is not enough, the other low which I showed you was here somewhere, like 938. Okay, let's be more conservative and place it at 953, because this was the most recent low after this. 953, how much time it took to reach 953? This was within one more week, like on 5th of February, it had hit the 953. And if we see the risk reward ratio in this case, risk reward ratio is 1:10, target of 26.16% and stop loss of only 2.5%. So these are the kind of entries, these are the kind of trading signals which you can get using Ichimoku Cloud trading strategies, which are Ichimoku Cloud breakout strategy and Ichimoku Cloud breakdown strategy. So this was the video for cloud breakout strategies, both on the bullish side and the bearish side. So in the next video, I am going to talk about another two strategies using Ichimoku Cloud, which are Ichimoku crossover strategies. So I would, if you enjoyed this video, if you got some value out of this video, share it, like it, and subscribe to the channel, because I get views, but I don't get enough likes. So do consider liking the video and sharing it with your friends, with your colleagues, and with your family, so that they can also gain the knowledge and gain in terms of finances as well. And yeah, that's it. Let's meet in the next video. Thank you.